Hello, everyone, and welcome to this latest episode of the Bull and the Bear podcast. I'm your host, Matt Clark, with moneyandmarkets.com. Glad you're with us as we are each and every time that we do this podcast. Thanks for clicking on us and listening to us, whether you're listening to us on Apple Podcasts, Google Podcasts, Spotify, iHeartRadio, or maybe you're even checking out our YouTube channel. If you haven't checked out our YouTube channel, I encourage you to do so. You can go to youtube.com, type in Money and Markets, and you'll find us, and you'll see a wealth of videos there. Ranging from all the past Bull and the Bear episodes. We've got our Week Ahead series that we put out every week. We've got a few new things in the works. I'll just tell you that those are happening. I won't tell you what they are. I'll let you find out for yourself. Well, if you go to YouTube, click subscribe, and you can get notified every time we do put up a new video, which happens pretty frequently. If you do have any comments or questions or anything like that, you can email us at thebullandbear@moneyandmarkets.com. If you have a stock maybe you'd like us to look into, or a sector or something like that you'd like us to discuss, just make sure you email us. It's thebullandbear@moneyandmarkets.com. Whether you're checking us out on podcasts or on YouTube, make sure to leave us a review, leave us a comment, leave us anything like that. We love your feedback and would enjoy hearing that from you. Today, I talked about Tesla about a week or so ago, about how it's been on the rise, and people have noticed that. Obviously, it's jumped exponentially just this year, but I think it's due for a pullback. But one thing that gets kind of left out is the fact that when we think of electric vehicles rather, we kind of put Tesla in its own bubble. We just kind of think Tesla is all by itself. And the fact is that that's really not true. There are actually many other companies that are either producing or on the verge of producing electric vehicles to somewhat compete with Tesla. And I want to talk about two of those today because I think it's worth discussing. And the two I want to talk about, there's one based in China and one based in Arizona. The one based in Arizona is the Nikola Corporation. Trades under on the Nasdaq under NKLA. The other one is a Chinese-based company in Shanghai. It is Nio Incorporated, and it trades on the New York Stock Exchange under Nio. So we've got Nikola and Nikola and Nikola. So, excuse me. Just to start this week, Nio actually jumped 14% in its share price after it reported a massive 322% increase in July vehicle deliveries. That's huge. I realize it's China and that's their primary market, but they do actually sell here in the United States. But a 322% increase in vehicle deliveries in 1 month, that's pretty impressive. Nikola jumped this week because Deutsche Bank analysts actually gave it a buy rating, and it surged about 22% as of Monday, and actually went up Tuesday as well. So it does speak to the fact that the electric vehicle market does have some potential competition. So first, I want to talk about Nikola. Again, it's trades on the Nasdaq under NKLA. Founded in 2015 in Phoenix, Arizona. What it does is it designs battery electric, hydrogen electric vehicles, electric vehicle powertrains, vehicle components, energy storage, hydrogen fueling stations. It does a lot of what Tesla does, basically, except for I think Nikola actually does more of their own battery production than Tesla does. I could be wrong with that, but I think that's kind of a give or take. But they also do they've also proposed items for both the military and outdoor recreation applications for their electric vehicle potential. So it's an interesting company in so much of the fact that they actually haven't produced anything yet. So what I find odd is that its stock has risen 22% in one day, based on really a lot of nothing, because again, they haven't really produced anything. There's been a lot of talk about a truck. There's been a lot of talk about various other things, but when it comes right down to it, Nikola actually hasn't sold anything. Their sales are zero, nothing. They are actually minus $3 million in negative in operating cash flow. And if you look at their technicals, it's kind of, it'll blow you out of the water. You look at their price to earnings and their price to cash flow, both 602. That's their ratio. That means that their share price is trading 602 to 1 for its earnings and for its cash flow, because they're not making any money and they haven't earned anything. So that's massive. Using Adam's stock rating system, which you've read time and time again on Money and Markets, and we've talked about it a lot here. Nikola has an overall rating of 2.25. And that basically means that nearly 98% of all other stocks rate better. And I mean all other stocks, all 6,000 plus stocks, all rate better on Adam's system than Nikola. It's got, like I said, its price to earnings is 602.5. The industry average, 18.8. Its price to cash flow, 602.16. The industry average is 9.9. That's whopping. I mean, that just speaks of massive overvaluation. And like I said, a lot of that is due to the fact that they haven't produced anything yet. They haven't sold anything yet. There's been a lot of talk, but not a lot of action. Boris Schlossberg with FX Strategies at BK Asset Management actually said that Nikola would be a strong potential competitor to Tesla because they proposed a 600-mile range electric vehicle. But again, they've proposed it. They've not actually built it. They've not actually done anything with it yet. So, you know, it would be no different to me than saying I'm going to go to my garage and I'm going to build a 1,000-mile range electric vehicle. And here's my public company. And then that somehow sparks. I know there's more to it than that, but you've got to look at this at face value. And honestly, until Nikola actually produces something, I find it really hard to recommend buying into this stock. And I know what some people will say is that, you know, Matt, this is one of those potential unicorn stocks. This is one of those potential stocks that you get in like an Apple or a Microsoft where you bought it before they actually did anything and then it just took off. And that's true. There is that possibility. I just don't know that with market fluctuations the way they are and how this price is so overinflated as it is right now, if Nikola is at that point. I don't see it. I think you're kind of spinning your wheels on Nikola if you're wanting to invest in it. If you do, that's fine. The numbers just don't say that this is something you want to buy into right now. If I see a prototype, if I see a model roll off, and even with no sales, but I see promise there, then I think you go back and you say, okay, then now maybe this is something to invest in because the share price is only going to go up. There's really no threshold for it because again, it's a company that's only been around since 2015 and they haven't sold anything yet. Whereas the second company that I want to talk about, which is Nio Incorporated, Nasdaq NIO, they actually have. They actually do produce and sell electric vehicles. Founded in 2014, based in Shanghai, China. They sell electric vehicles in China, Hong Kong, the US, the UK, and Germany. They have 5, 6, and 7-seater SUVs. They also have, they've also expanded into the home side of things. So they do home charging solutions, battery swapping services for the vehicles, mobile charging devices through charging trucks. So basically they have like AAA that will come and charge your vehicle mobile on the road. Public charging, and then on-demand pickup and drop-off charging services. So they've created kind of a nice support system for their vehicles where if you buy a vehicle, you have a lot of different options in terms of how you can charge your vehicle. Right now, to find a place to charge a Tesla can be challenging depending on where you live. They're not at every gas station. They're not at, if you're driving through the desert between Las Vegas and Los Angeles, it's going to be a little difficult to find a charger for a Tesla. But Nio has actually kind of thought outside the box there and said, well, why don't we just have like a AAA service, which I think is actually pretty good. I like that idea. I like that diversification. To say that Nio is a strong buy would be an overstatement because it's really not. On Adam's proprietary stock rating system, right now it rates a 5.75, which is better than Nikola, but not as good as about 94% of all other stocks on the market. It's got low value. It's got low quality right now. It's got very mild volatility, which is kind of encouraging for this kind of stock. And it's got mid-range momentum. It rates about a 58 with momentum, which is not bad. It's not super great, but it's in that top half of the tier with stocks. So it's certainly worth looking into. They've jumped massively of late, and a lot of that has to do with analyst expectations and things like that. One analyst, Ari Wald with Oppenheimer, has said that his thought is that the stock has consolidated since peaking in July, which could suggest that overbought positions could pull back. which would allow its moving averages, its 200-day and its 50-day moving average, to start to catch back up to where the price is. And then that would allow a little more momentum to build the stock back up, which makes sense. I mean, that's something that makes a lot of sense, and is something that is completely possible. In fact, it's something that I think is going to happen. Again, if you just look at this based on Adam's factors, neither one of these companies are really a buy. Tesla is not even a buy at this point. But I think if you're looking strictly at electric vehicles and you want to try to pinpoint a potential competitor for Tesla, I think Nio is probably your better choice. And I say that for a couple reasons. One, they actually have products on the road. They have already produced something. They have a proven model of what they can manufacture. Two, they have massive inroads already in China. China is the largest electric vehicle population to date. They are the largest base for the electric vehicle market right now. It's not the US, it's not Europe, it's China. And you've got a lot of population, there's a lot of things going on with the population in China that is dealing with pollution. Electric vehicles, solar, we've talked about that before. Those are the types of things that the Chinese government are looking into to try to stem the tide of the pollution and carbon emissions in China. And electric vehicles do that. And we're seeing a massive rise in, you just saw Nio, 322% increase in July deliverables, and a lot of that was in China. They already have massive inroads there. They've kind of already, they beat Tesla to the punch. Tesla has its Shanghai factory, its Gigafactory in Shanghai, which produces, the Model 3 in China, and does well there. But Nio already has those inroads built. So I think if you're looking for a competitor to Tesla, if you're looking for a true disruptor for Tesla at this point, I think Nio in China is your much better pick than Nikola. Again, because of China, because of the inroads in China, and because they already have a proven product on the road. Am I saying that either one of these companies are necessarily a buy? No, I'm not. In fact, I would say that unless you are just diehard, your portfolio is diehard into emerging technologies, into solar, into alternative energy, or just strictly into electric vehicles, then I think it's too volatile a market right now to really do anything in EVs with any of the three, Tesla, Nikola, or Nio, or anything else that comes up. There's many other companies that are starting to kind of test the waters with EV. So really, unless you're specifically geared to that, I just don't see any of these three companies as one you really want to get into right now. Their technicals just aren't there. Tesla is way overvalued. The price is way too high. It's going to consolidate, and maybe that'll be a point to where you want to you want to get in. All three of them have jumped 240% or more this year, which is impressive. But again, I think it's a lot of speculation. It's a ton of speculation, and that can be very dangerous if you are trying to either buy and hold, or you're trying to look for additional income for your retirement or things like that. I think it's an awfully risky venture. So right now, I would suggest that, like I said, unless you're specifically geared towards the EV market, emerging markets, or alternative energy, none of these three companies are probably ones you really want to get into right now. But if you are diehard and trying to find maybe an offset to a Tesla with maybe a lesser expensive price point that could potentially bring about equal returns, equal rise in value, then I think Nio is probably your way to go. Its technicals are a little bit better, not a whole lot, but a little bit better. I do agree with Oppenheimer. I think that the consolidation is going to allow averages to start to trailing averages to start to catch up to price, and then once that happens, then I think you're going to see the stock be able to take off again. So again, if you're going to invest in Nio, don't expect immediate returns. Don't expect immediate gains. Don't expect massive gains right out of the gate, because I don't think it's going to happen. And with Nikola, I can certainly, with a pretty high degree of certainty, I just don't think it's going to happen. So that's kind of my thought on those on the EV market. Again, I love it. I think there's definitely inroads to be made with electric vehicles. I think there's a place for them. I'm encouraged by the fact that we're seeing more and more companies start to really creep into the market. I think it's a big disruptor to traditional automotive, which is something that industry desperately needs. And I think it's taking hold. I mean, Tesla does well. Tesla's deliveries do well, and that's a testament to the fact that people want electric vehicles. And this is going to be a continuously evolving sector. This is going to be something that you're going to see more and more technology evolve to, just because that's just the nature of electric vehicles. That's where you're going to see a lot of automotive tech get tested, I think, is in EV, not in a traditional Ford F-150 or in a Chevy Camaro or anything like that. You're going to see newer technology. I think you're going to see autonomous driving come in potentially in EVs before you see it come in gas-powered vehicles. I could be wrong, but I just think that technology goes where technology is, and you see technology and different things in technology. Usually, ideas in technology migrate where technology already starts to expand. And so I think you see that in EV, and I think you're going to continue to see that going forward. So those are my thoughts. Again, thank you for listening to this episode of the Bull and the Bear podcast. On Friday, I'll have Charles Sizemore and Adam Odell, Chief Investment Strategist for Money Markets, on. We'll talk about a particular sector, pick out a couple stocks and talk about that. If you have a comment or a question, email us, thebullandbear@moneyandmarkets.com. I'll flash the email down here for you. Listen to us anywhere. You can listen to us on Apple Podcasts, Google Podcasts, Spotify, iHeartRadio, about 20 other podcast syndicators. Leave us a review. We'd love to hear what you think. Check out our YouTube channel. We video every podcast that we do, and you can go to YouTube, type in Money and Markets, and we're right there. You'll find us. You'll see all the other videos that we have up as well, and get alerts if you subscribe. Just hit the subscribe button down at the bottom, and you'll be able to get alerted anytime we put up new videos, which are happening more and more frequently now. So I encourage you to do that, and would love it if you gave us some feedback. So until then, I appreciate you listening, and we'll be back on again on Friday. Until then, I'm Matt Clark, market research analyst for Money and Markets and host of the Bull and the Bear podcast. Until next time, safe trading.